Okay, so I'm recording at night to avoid the noises during the day. Hope that's okay. So this would be our first topic for banking and financial institutions, and the topic is about financial system, specifically here in the Philippines, but most of the discussions will still be general topics. All right, so let's go into it. Alright, so here is my script. The content of our discussion might as well let you see. Alright, so first topic, overview of the Philippine financial system. What we will be discussing are as follows: the nature, elements, functions, and then the development and structure of the Philippine financial system. Okay, so first we will be discussing the financial system in general. So I have here an article from Investopedia explaining what a financial system is. So the definition: a financial system is a set of institutions, such as banks, insurance companies, and stock exchanges that permit the exchange of funds. Okay. Our subject, banking and financial institutions, from the content that we will be covering this semester, we will be discussing the Philippine financial system and then the banks and the non-banks financial institutions. Okay, the financial institutions, banks and non-banks, those includes banks, insurance companies, stock exchanges. Okay, so basically it's a place where there is an exchange of funds. From people who have excess cash, they put it in the financial institutions, and then those who need the cash, those who need the money, then they will borrow from the financial institution. So it's a kind of system where the demand and the supply for money or for funds meet. Okay, so financial systems exist on firm, regional, and global levels. Okay, so a company in itself, of course, they have their own system, and technically that's a financial system at its single unit. And then we have the regional, or basically the national level, because we're governed by, we have one economy and we are all operating in the same economy. And then we have the global levels because countries, they do trades between themselves. And of course we also have international financial institutions that also allow the exchange of funds between countries. Okay, so borrowers, lenders, and investors exchange current funds to finance projects, either for consumption or productive investments, and to pursue a return on their financial assets. Okay, so we have basically players here. We have the lenders, the people who have excess cash. We have the intermediary, the financial institutions, wherein these people put their money into. And then on the other side, we have the borrowers, who would need their money either to, support their businesses or to expand their businesses, to start a business idea. Okay, so they would borrow money from the intermediary, the financial institutions. Okay, so there are different reasons on why borrowers would like to have the funds. Okay, and then continuing on, the financial system also includes sets of rules and practices that borrowers and lenders use to decide which projects get financed, who finances projects, and terms of financial deals. Okay, so basically the intermediaries, the financial institutions, most of them are banks. Okay, before they allow these borrowers to get money from them, before they grant the loans or the extension of the grant of the capital or the resource to them, of course they would have to assess or evaluate the capability of these people, or the idea that they have, or the business that they are doing. Okay, before they are given the financial resources. Okay, they have to prove themselves that they are capable of making the funds grow, that they're going to eventually profit or earn money from using the funds, and they're not going to waste the money. Okay, so it falls on the intermediaries or the financial institutions to do that job, to ensure that the money will be properly used, properly utilized in such a way that only businesses that have potential will be given the funds. Those that don't have potential, that are not feasible, that will probably not earn money will not be, will not be given the money. Okay, kasi it's going to be wasted anyway. Okay, so my cat is, yeah. Okay, moving forward, or the italized part here, this is basically supposed to be my discussion. Okay, so again, financial system, so it's the collective of all banks and non-bank financial institutions working together in an economy or in a country, okay, meeting the demand and the supply. Here in the Philippines, we have the Department of Finance, and under the DOF is the Bangko Sentral ng Pilipinas. And the Bangko Sentral ng Pilipinas is the regulatory agency monitoring and supervising the operations of banks and non-banks financial institutions. Okay, there are laws governing financial institutions, both general and specific. So we have general, which basically covers all financial institutions, and then we have specifics, specific laws for banks, for pawn shops, for foreign exchange. Okay, there are certain specific laws. Okay, so there are rules and regulations that must be complied with. Okay, so it's not only the institutions, it also includes the laws and how they are being regulated. So the system involves money, and money is used by the public, so everyone. And given that, it's imperative that things are regulated. Okay, so it relates to other subjects, topics, systems, in such that the economic side of things regulate prices, conduct of business, interest rates, exchange rates, so things that make use of money. Okay, so that's a separate subject which we will be having in the second half of the semester, monetary policy and central banking. But for now, we will be focusing on the financial system, the banks and non-banks financial institutions. Okay, so just keep in mind, the financial system is composed of the institutions as well as the regulations. Okay, and then this is part of the article still. Okay, so key takeaways: a financial system is the set of global, regional, or firm-specific institutions and practices used to facilitate the exchange of funds. Okay, we've what do you call that? We've already told that. Financial systems can be organized using market principles, central planning, or a hybrid of both. Okay. Yeah, basically it's being regulated by the Bangko Sentral. So there's central planning. Okay, and then of course we have the principle, the concept of supply and demand, and then the monetary policy, of course, that those are market principles. Okay. Institutions within a financial system include everything from banks to stock exchanges and government treasuries. Okay. Basically, itong mga institutions na to, we'll be discussing them later on, both banks and non-banks. Okay. Understanding the financial system, like any other industry, the financial system can be organized using markets, central planning, or some mix of both. Okay, already covered that. Financial markets involve borrowers, lenders, and investors negotiating loans or other transactions. In these markets, the economic good traded on both sides is usually some form of money, current money, cash, claims on future money, credit, or claims on the future income of potential or value of real estates, equity, investments. So these also include derivative instruments such as commodity futures or stock options. These are financial instruments that are dependent on an underlying real or financial assets performance, type of investment. So in financial markets, these are all traded among borrowers, lenders, and investors according to the normal laws of supply and demand. Say hi to my cat. No! Okay, ini-scratch niya ako. Financial markets, basically yan yung mga players natin. So we have, again, borrowers and then the lenders. Okay? The borrowers, the ones who need the money, and then we have the lenders and investors. They're the ones who have extra cash that they are not using, but they would like to earn profit. Okay? So what's being exchanged here is money. And then on the part of the depositors or the lenders, so they would like to earn interest. And then on the part of the borrower, for the use of the funds, of course, they have to pay the charges and the interest. Okay, so you borrow money, you have to pay charges and interest. You lend money, you earn a profit for letting someone else use your money. Derivatives, commodity futures, stock options. So we'll discuss this in a separate subject. What's the subject again? Investment and portfolio management, FM 105, if I'm not mistaken. Okay, so basically, as financial students, your subjects are linked together, but I can't give you everything all at once, so we're separated into different subjects. Okay. One thing that affects the exchange of money is supply and demand. It's biting me. I'm going to push you out of the way. Where am I? So there won't be a lender if there isn't a borrower. If someone doesn't need money, someone with extra cash would have nothing to do with it. So it's basically, supply and demand pa din. In our current situation with the existence of poverty in our country, so there is definitely a large demand for it. People need money. And the financial institutions are providing the service, a lot of loans, different types of it. Okay. Continuing with the article, in a centrally planned financial system, the financing of consumption and investment plans is not decided by counterparties in a transaction, but directly by a manager or central planner. Which projects receive funds, whose projects receive funds, and who funds them is determined by the planner, whether that means a business manager or a party boss. Okay. In our financial system, we have the government on one side and then the general public on the other. The government side of things are definitely under one command. Okay, so we have the executive branch of the government, supported or scrutinized by the legislative body. So every year, they prepare the annual budget. I'm sure you've heard of it from the news. And each branch of the government would have to spend the funds allocated to them while adhering to the budget provided to them, subject to availability of funds as monitored by the Department of Budget and Management. So above describes how our government collects money and then spends them. Okay, the reality of it is that although there is the approved budget, not all of it is actually given to the different departments. We have the DepEd, you have the Department of Health, you have the what else? Department of Defense. Okay, so there are different departments. They would be needing money to fund their operations or activities. And then, of course, the main source of the government fund is the taxes. So the disposition, or what do you call this? The funding of these departments, the budgets, would still depend on the collection of the Bureau of Internal Revenue, the Bureau of Customs, okay, the Department of Tourism. Okay, so more often than not, the total budget allocated to these departments are not given in full in a specific fiscal year. Okay, so because it would depend on the availability of funds, which is essentially what also happens in private companies, okay, or in any organization that would be spending money for their operations. Okay. Okay. So that's how it is in the government, and then on the part of private companies, it's the same. Okay, so you have budgets for different activities, and you have to allocate the revenue that's going to be generated by the business to ensure that all the necessary or all the priority expenses are paid for, especially the salaries, taxes and licenses, utilities. Okay, so essentially a specific company is also it also has a financial system on its own. Okay, moving on, most financial systems contain elements of both give and take markets and top-down central planning. For example, a business firm is centrally planned. A financial system with respect to the internal financial decisions. Okay. However, it typically operates within a broader market, interacting with external lenders and investors to carry out its long-term plans. Okay. So basically, internally, it has its own operations, payment of expenses, generation of revenue, but they still deal with external parties. They pay their creditors, and then they have investors who would infuse money into their operations, which they have to pay in terms of dividends or interest, okay, depending on their agreement with the investors. Okay, so how one company operates and manages its funds is almost the same how it is in the industry as a whole. Okay, so the so-called financial system. In a business, you have to decide where to put the money, how much of it would be used for a particular expense, how would it be earned back, is it going to earn us more money? If it's not properly managed, the business would fail. So if banks and non-bank financial institutions are left unmanaged, they would most likely commit grave mistakes. In fact, a lot of them already did in the past and over the years. The BSP and other regulatory bodies, internationals, would come up with new rules and regulations. Okay, so during the financial crisis of 2008, a lot of banks, especially rural banks or smaller banks, were unable to survive. They went bankrupt. At that time, some of their activities are not regulated, and after that experience, the regulatory bodies issued new regulations that would ensure banks would not make the same mistake. Okay, so capital retention requirements were laid down. They're not allowed to engage in activities not provided by law. So they would need to secure permits from the BSP or the regulatory body before they can offer new services. Okay, they would need to prove that they are capable, and in worst case scenarios, how are they going to deal with the problem? Have they thought of all the possible consequences, all the problems that may arise? Okay, so take digital banking. If there's a glitch in the system and the account suddenly shows zero, what's their procedure to correct the mistake? How long will it take? How would they communicate the problem with their customers? If you remember, there was a BPI error in 2017. It affected a lot of people, and it surely lost them quite a number of customers. Even my account was suddenly negative during the time. So only the fact that I worked in a bank before and their explanation was highly plausible, that I believed it was merely an error and not any sort of hacker attack. Okay. Remember the Bangladesh Central Bank heist in 2016 involving the RCBC. So the money involved hasn't been returned in full, okay, until this time. I think it was already decades ago when people have been able to open accounts using fake names, other people's names, so long as they have money to deposit. In the late 1990s or early 2000s, money laundering is a huge issue. Scams using digital wallets or online banking has proliferated decades ago when it's still new and no regulations are in place yet. So people lost money with no recourse on how to get them back. So these days, a lot of changes have already been put in place. It's more difficult to commit financial fraud. Okay, so there are digital traces now. If someone stole your login credentials, so there are ways to know the IP address of who used it. So the banks can be contacted as well to suspend your card if you think someone else is using it. You can apply for chargebacks if there are unauthorized charges on your account, and that one still takes a long time to process before you get your money back, but at least we now have hope to reclaim our money. Okay, back then you can literally lose all your money in just a snap. Okay, so the regulations have been made, and it makes it harder for criminals to steal or for fraudsters to, scam people or to steal money from people. So they protected people's money lodged in financial institutions. So they protected the operations of the financial institutions as well. Okay, so the thing about this is that there have been problems first, and then the solutions were made afterwards, and the regulations also came after there already had been problems. But anyway, at least the problems were resolved eventually. But those who suffered during the beginning of those types of new services, so well, they pay the price for it or something. Continuing on, at the same time, all modern financial markets operate within some kind of government regulatory framework that sets limits on what types of transactions are allowed. Okay, so currently, banks, I think, are not yet allowed to do cryptocurrency, although cryptocurrency is definitely, gaining traction and becoming famous of some sort. Okay, so financial systems are often strictly regulated because they directly influence decisions over real assets, economic performance, and consumer protection. Basically, the movement of money within the economy, it basically affects the economy itself. Okay, so that's why it's very important that it is strictly regulated. Okay, financial market components. I'm just going to get my cat. The cat has been subdued. Alright, continuing on. Financial market components. Multiple components make up the financial system at different levels. The firm's financial system is the set of implemented procedures that track the financial activities of the company. So within the firm, the financial system encompasses all aspects of finances, including accounting measures, revenue and expense schedules, wages, and balance sheet verification. Right? We have auditing as well. On a regional scale, the financial system is a system that enables lenders and borrowers to exchange funds. Okay, so basically, it's the national level where we have the banks and the other financial institutions where lenders and borrowers can meet to exchange funds. Okay. And then the global financial system is basically a broader regional system that encompasses all financial institutions, including the international ones, borrowers and lenders within the global economy. Okay. In a global view, financial systems include the International Monetary Fund, central banks of each country, and then government treasuries and monetary authorities, the World Bank, and then we have the major private international banks. Okay, we have the Asian Development Bank. Okay, and then of course, central bank, we have the BSP, government treasuries and monetary authorities. It still goes through the BSP, okay, here in the Philippines. Okay, next subtopic, elements of a financial system. Different searches provide different answers, but let's go with this one. The financial system primarily concerns itself with borrowing and lending. Okay, so we have lenders and borrowers again. Those who have extra cash, they put their money in the bank, and then those who need cash, they go to the banks and borrow money from there. Okay, the financial intermediaries would be the banks and the other financial institutions, and then the financial instruments would be the deposits, the loans. Okay, and then of course there are other financial services nowadays. Okay, where is it? Okay, so we have investments as well, insurance. Okay, so those types of things. Financial markets, this is where trading or exchange of money occurs, so mostly at financial institutions. But there's also the stock market. We'll be discussing that in IPM. And then the bond market, foreign exchange market, and derivatives market. Okay. Next, we have money creation. So this is done by BSP in our country. So I have here a quote from Inquirer article. The amount of currency printed and minted every year is dictated by the size of the economy and the need to replace notes and coins that are no longer fit for you. So all notes and coins, every peso, every Filipino has, are backed up by the BSP's assets. Okay, so there are people who are asking, the BSP is the printer of money here in the country. They print the notes and they mint the coins. Okay, so why is it that the BSP cannot print as much money as we need to pay off the debts or for us to support the needs of the government? Why do we have to borrow from the World Bank or from IMF? Okay, so basically, again, economics. So we have the law of supply and demand. What goes around comes around. So what normally happens is that if there is a large supply of money in the economy, the next thing that could happen is a higher rate of inflation. What happens in inflation is that, since there are so much money in the market, available in the market, in the hands of the government or in the hands of the public, so what could happen is that the prices of the commodities could go up, and then when the prices of commodities go up, the workers, the employed people would demand for higher wages. Okay, so we have higher wages now, we have high prices, so basically it evens out. Okay, because the supply would have to be balanced out by the demand. Okay, so essentially what would happen is that it's pretty much the same. Okay, what would happen is that the prices would increase, the rate of wages would increase, but the purchasing power of the money, how much you can buy with your new salary, is still the same as before. So instead of inflating the economy, what we want to do is to suppress the level of inflation. So the BSP can only print as much money as needed by the economy. And also legal tender, all notes and coins that are in circulation, these are backed by BSP's assets. Okay, so basically, how much is the value of the Philippines and its assets is equivalent to the amount of money that's in circulation. Okay, not necessarily the value of the Philippines itself, because land, country, but the economic activity that we have here. Okay, the value of our economy, let's just say. Okay, so this will be discussed in FM 104, monetary policy and central banking. Okay, more detailed. Okay, and then we have lastly price discovery. So price discovery, as quoted from Wikipedia, so the price discovery process is the process of determining the price of an asset in the marketplace through the interactions of buyers and sellers. Okay, before the invention of money, we have barter, right? So you have here a buyer and then you have here a seller. Okay, basically, price discovery is what's agreed upon by the parties. Okay, how much is one party willing to pay for something versus how much one is willing to sell something. Okay, they would negotiate and then they would meet at a certain point. They would agree at a certain price, and that's the price discovery. Okay, so again, these are the elements of a financial system. Okay, third subtopic, we have the functions of a financial system. So this one is an article from Industria Global. So a financial system functions as an intermediary, the banks and the non-bank financial institutions, and facilitates the flow of funds from the areas of surplus, the lenders who have the extra cash and they put them in the financial institutions, and then to the areas of deficit, those people who don't have the money but they need it. Okay, so they go to the banks to borrow money. Okay, so essentially that's the function of a financial system, to make these two parties meet in the middle through the financial institutions. Okay, so it's a composition of various institutions, markets, regulations, okay, we have laws, and then the practices, money managers, analysts, transactions, and claims and liabilities, okay. All right. So the function of financial system again is to facilitate the flow of funds between these parties that we have, okay. And then another article provided this answer for the function of a financial system. So we have savings. So those people who have extra money, they can save their money into these financial institutions, mainly banks. Okay, so that's one function of the financial system, to allow savings. And then we have liquidity. Okay, so you put your money into the banks. How easy is it for you to withdraw money when you need it? Okay, so basically that's what liquidity is for. Okay, stocks, bonds, and debentures. In case of investors, okay, they put their money, instead of in banks, they put their money in through banks pa din naman, through banks, they invest in other companies. Normally, the banks offer investments in the form of ETFs or asset management. Okay, so you put your money to them, and then they would be the ones managing it. They would be the ones investing it in corporations or in bonds or in stocks or in debentures. Okay, and then there would be a process in which if you need money, you would have to make a request from the financial institution, and then the financial institution would have to liquidate. Okay, they would have to sell the stocks that they acquired on your behalf, the bonds, the debentures, and then once that is sold, or once that is liquidated, then the proceeds would be returned to you. Okay, and then we have payment. The financial institutions allow payment in the form of check, credit cards, bills payment, etc. Okay, so basically, the financial system make it easier for these things to be done. Okay, savings, liquidity, payment. And then we also have risk, or the provision of insurance. We have financial institutions, insurance companies. Insurance is basically a layer of protection for uncertainties. Okay, so basically you have life and non-life insurances, accidental insurance, death insurance, life insurance. They call it life insurance, but you get the benefit when you die. Okay, we have health insurance, fire insurance, calamity insurance, that kind of thing. Okay, and then we have policy. Okay, the operations of the financial institutions, because of their operations are affecting the general public, it called for regulations. Okay, so we have the BSP, created by law to manage and supervise the flow of the operations of the financial systems, as the financial institutions rather, as well as the regulation of the interest rates, the inflation. That's why the BSP basically knows how much money is in circulation, because they are also trying to control the level of inflation. And then depending on how much people are saving or how much people are borrowing, the interest rates can go up or down depending on the supply and demand. Okay, so there's another article, what's this? An analystprep.com, which answers the functions of a financial system as well. The answers from there are the following, almost the same as what's up here. Okay, so you have your savings, it allows savings, and then it also allows borrowing. Basically, okay, the banks or the financial institutions have the money of the depositors, and then they allow people to borrow money from them for them to earn as well. Okay, raising equity capital. Okay, those people who have ideas, who have existing businesses, and they want to expand, but they don't have the financial resources, so they would go to financial institutions to get those needed capital. Okay, and then managing risk, because the financial institutions would have to assess, okay, the borrowers, whether they are capable of growing the money or they are capable of repaying the money later on, because if they evaluate that this person is probably not capable, their business is not really doing well, so they are technically managing the risk. Okay, that's one of the role that the financial institutions are playing. Okay, instead of, we have your depositors on this side, the people with the excess cash who put their money into the banks. If they don't have the technical knowledge on borrowing, lending, credit, okay, so they would not risk lending. They would not risk lending the money directly to someone else. Okay? Let's say to their friend, to their family members. Because basically, that's a risky move. So instead of doing that, they just put their money in the banks, and then whoever wants to borrow money, let the bank assess their capability, their situation, before the money is given out to those people who are capable. Okay, and then we have exchanging assets for immediate delivery. Basically, these parts here, these are mostly related to investing. Okay, so you have information motivated trading, determining appropriate rates of return, and then efficient capital allocation as well. Okay, so these three, these are related to investing, and then efficient capital allocation, the same concept as in managing risk. Okay, where the money would go would depend on the evaluation by the financial institutions. Okay, so that's it for functions of a financial system. Next, we have the development of the Philippine financial system. So I have here an article from Manilin and Ataba, I think. Okay, not sure if I pronounced that or if I read that properly. Anyway, so we have here the history of the financial system. So it's a bit futuristic. Financial system is like the heart of human beings. If it stops working, then the person is dead. In the same way that if the financial system stops working, then the company would collapse. Okay, basically it's true. The financial system is regulating the flow of money as well from person to person. So it's like the comparison, yeah, it's the heart, but I'd rather compare it to the blood, okay, because it's the thing that flows. Okay, so if it stops working, then the person is dead, so the economy would collapse. Okay, there would be no movement of money. So what's the point of selling if someone's not going to buy, because the money is not circulating. But then again, that's probably not going to happen, because people they have their daily needs, and we do buy things from the market every day. Okay, so that's that. It is inherent in every society, the law of supply and demand. Okay, so there will always be those who have surplus resources, those rich people who have extra cash, or those people who are financially independent, who knows how to manage their money, who have savings in their banks. Okay, and others will have deficit. Okay, so we have people who they were born into regular families, but they have ambitious dreams. They would be needing money to use as capital for their business ideas and whatnot. So they would have deficit, but they could access the financial system so that they could get the capital that they need. So the financial system is crucial to the allocation of these resources. Okay, in the Philippine setting, financial system is composed of banking institutions and non-bank financial intermediaries. Breakdown yan, we have the commercial banks, specialized government banks, LBP, DBP, and Emana. And then we have thrift banks and rural banks. It is also composed of offshore banking units, building and loan associations, investment and brokerage houses, and finance companies. So all these, we will be discussing them in depth later on. Okay. The Bangko Sentral ng Pilipinas and the Securities and Exchange Commission maintain the regulatory and supervisory control. Okay. BSP basically it focuses on financial institutions, on the regulation of financial institutions. And then the SEC is also involved because They are in charge of supervising partnerships and corporations, given how most financial institutions are in the form of corporations. So they're also involved. What do you call this? Accounting reporting requirements are normally go through Securities and Exchange Commission, but definitely they are also required by the BSP. Okay. The first credit institution in the Philippines, Obras Pias, started by Father Juan Fernandez de Leon in 1754 and ended in 1820. It was in 1851 that the first Philippine bank was established, the Banco Español Filipino de Isabela II. This is now known as the Bank of the Philippine Islands, BPI. It is the oldest standing bank in the Philippines and in the whole of Southeast Asia. It was established on August 1, 1851 and named after the mother of then Spanish King Alfonso XII. The 12th? I'm not sure. Anyway, her mother's name was Isabella. The bank only came into being after 23 years after Spanish monarch Ferdinand VII decreed that a public bank was to be established in the Spanish colonized country of the Philippines. This is during the time that we are still under the Spanish rule. The bank began its operations in 1852 and was given the honor of being the first to issue paper money. Okay, so before we only have coins, and then 1852 creation of paper money. In 1906, First Agricultural Bank of the Philippines was established, and in 1916, all of its assets and liabilities were transferred to the newly organized Philippine National Bank. Okay, so they take as far as that. Okay, towards a resilient and inclusive financial sector, the financial sector intermediates claims between savings and investors, the credibility and stability of financial institutions, and the relative attractiveness of various financial instruments to borrowers and lenders alike determine how much saving will mobilize, how much it stays in the country to be invested, and how this is to be allocated among the various firms and industries. Together with the state of confidence and long-term expectation, therefore, the stability and performance of financial institutions such as banks, equity and bonds market, insurance companies, and other financial entities have an indirect but vital bearing on investment and the growth of output and employment in the country. Alright, so what do we have here? BSP is under DOF, Department of Finance. Department of Finance is, of course, a government agency governing the monetary concerns of the government and the public. Okay, so what happens is that basically there's a communication or collaboration in ensuring the stability of the economy. Okay, let's go to this. How much stays in the country to be invested and how this is to be allocated among the various firms and industries. Okay, so we have the banks or the financial institutions, especially the banks and the investment houses. They are the ones that allocate the resources. Okay, basically they have they conduct studies, and then they also have what do you call this? Not exactly directives, but probably suggestions from the BSP or the DOF on which industries are viable currently in the current situation, and in that case, these banks or these financial institutions would put the money that they have into those types of investments. Okay, let's say you have here a line of people who would like to borrow money from the banks, but the banks or the financial institutions have determined that certain industries are going to be prioritized to be given the resources to be lent the money. Okay, so we have let's say industry A, B, C, and D, and then let's say the banks determine that only industry A, C, and E are to be supported, okay, currently, okay, because the current economic situations are in favor of them, and then the current situation is not favorable for certain industries, so they'd rather not put their money on those industries that are falling or failing, okay. So in a way they are playing their role, okay, in that sense, in the growth of certain industries, or in helping out in the growth and development of certain industries or certain companies. Mostly it's industry, at the industry level. Okay, assessment. The Philippine financial system manifested its strength over the past decade, including the period of recent global financial crisis. After significant dislocations in prior crises in the 1980s and 1990s, as well as the 1997 Asian financial crisis, the system saw a steady improvement in the balance sheet of the banking industry, the issuance and listing of corporate bonds, and the underwriting of insurance contracts. Moving forward, however, the system will need to address concerns about the sustainability of its performance if it is to contribute significantly to development. Okay. What do you call this? I'm not sure in which financial crisis it happened, but a lot of banks at one point invested in real estate, and then there was the real estate bubble in the US, and basically it failed and the value went down, so the investments incurred a lot of losses, and that's one of the crises that banks faced before. And then after that, I think the regulations mandated that a certain level of the capital of banks would be retained and would not be used for any investments. I think the current level is 10%, or is it 30%? Okay, which would allow them to some sort of backup funding for them to be able to bounce back or to be able to survive such crisis. Okay, so there is that. 1997, this I'm not sure if it's going to be in this subject or in the next subject. Basically, there's a movie about the 1997 Asian financial crisis, which I'm going to have you watch, and then reflection on how the government actually handled the situation. Did they do the right thing, or did they mess up badly? Okay. Moving forward, parallel to these, policymakers pursued broad-based financial sector reforms centered on restructuring the banking sector, institutionalizing corporate governance reforms, improving risk management, and strengthening the supervisory oversight of financial regulators in the early 2000s. Together with improved macroeconomic conditions, the steady inflow of remittances from OFWs, a minimal investment exposure to foreign structured products, and a low dependence on exports, these reforms allowed the financial system to avoid the worst difficulties encountered by other economies during the 2007-2008 financial crisis. Okay. Basically, one of the advantages of having a large population is that we have a lot of OFWs who send money into our country. So in a way, that's an input that's a great help in the growth of our economy. Okay. And then at that time, during this crisis, 2008, there's also minimal investment exposure to foreign structured products. Okay, so basically the 2008 crisis was caused by the financial bubble in the US. So since at that time our country is not that exposed to foreign investment, so it didn't have that much of an impact. Okay, or it's not as bad as the other countries. Okay, we didn't experience all the worst case scenario. Okay, and then next, the financial system's performance has been positively reviewed by third parties. Stress tests conducted on banks also confirm the strength of the banking system's capitalization, even with extreme test parameters. For inclusive finance advocacy, local supervisory initiatives have also been repeatedly acknowledged by international institutions. These external validations of the improvements in the financial sector culminated in the sovereign ratings or outlook upgrades from some of the major ratings firms. Okay? Basically, there's an international organization that provides credit rating of the different economies or different countries. I'm not sure about their current standing. I can check it out. Maybe in our next video, we'll have to mention it. Okay. Alright, last subtopic for this one. Okay, so we have the structure of the Philippine financial system. This part here still comes from Manilin and Ataba article for financial system. Okay, so we have the current structure of the financial system in the country. It's primarily bank-based rather than capital market-based. So we have a lot of banks here in the country. The banking sector, whose total assets accounted for more than 80% of the total resources of the financial system and of GDP in 2010, plays the primary role in financial intermediation and is the main source of credit in our economy. Okay, so I think this article is after 2010. I think this is around 2011 or 2012. So across banking groups, universal and commercial banks continued to hold the lion's share of key balance sheet accounts of the banking system on account of their market maturity, branch network, and capitalization. The comparative market shares of key banking groups are summarized in Table 6.1. Do we have it? Okay, this is Table 6.1. What do we have here? Bank category. Okay, so we have different classifications of banks. We have universal and commercial, thrift banks, rural and cooperatives. And then, okay, so those are the main types of our banks. And then performance indicators, we have the assets that they have. So basically, out of all the banks, the largest amount of assets are from universal and commercial banks. Okay, and then we have thrift banks, and then rural and cooperative banks. And then when it comes to core loans, of course, pinakamataas pa din. The largest, with the largest share still remains universal and commercial banks. In terms of deposits, still them, and then in terms of capital, still them. Okay, and then this is 2009, this is 2010. Okay, physical composition, head office, net profit, branches. Okay, so we have these parameters. Okay, going back, meanwhile, the market share of non-bank financial institutions remains relatively small, accounting for about 18% of total assets of the financial system and 17% of economic output in 2010. The Insurance Commission, for instance, reports that only 13.9% of the Philippine population has private life insurance coverage. In 2008, the private insurers' penetration rate, or the proportion of the premiums to the country's GDP, was only 1.1%, very low. Among the reasons cited for the low insurance coverage is the lack of priority being placed on insurance products by the citizenry and the low financial literacy level among low-income households, including the informal sector. Okay. So basically, the structure of our financial system, majority, more than 80% of it is, bank-based, and then small portion is non-bank financial institution. So some sort of 80 and then 18%. And then yung non-bank financial institutions, we have a small portion of it is the insurance. Basically, even until now, there are a lot of people who do not like getting an insurance coverage because, you know, it's going to be a waste if you don't use it or if you've never used it. But in case you need it, okay, it's going to be a great help. And I think a lot of people don't understand the concept of insurance yet. So later when we discuss private insurance companies, we'll be discussing that as well. Okay, so a lot of people think that you should only get insurance when you get older, let's say when you're in your 40s or 50s, okay, when you're nearing your age of retirement. But essentially there are different types of insurance. Okay, there's health insurance, life insurance. Basically, I think even younger people would need health insurance, okay, coverage. Anyway, that's for later discussion. Okay, then we have this figure, comparative market share of the insurance industry. Okay, insurance industry is like 1.1 of the GDP. Okay, 13.9% of the total population has life insurance coverage. Okay, and then you break down, yeah, we have non-life 70%, life is 29%, and then professional reinsurer 1%. Okay, total value niya 528.2 billion. This is in 2009. Okay, so the insurance industry's total assets reach 528.2 billion as of end of December, with 122 market players. Life insurers capture the bulk, 79%, while non-life insurers at 19% and professional insurers at 2%. Okay. Meanwhile, the number of companies listed in the Philippine Stock Exchange grew to 259 companies in 2011 from just 12 companies in 2003. Okay, so we have the Philippine Stock Exchange. Basically, we'll be discussing this in IPM, Investment and Portfolio Management, stock trading. Okay. Despite the rise in the number of listed companies, market capitalization as a percentage of economic output remained small. Yeah, because very few people, especially yung mga individuals, they do stock trading. Majority of those who enter the stock trading are those who have the money, the rich. Before, when you want to do stock trading, the required minimum initial capital is around 100,000, so not many people could really join. But currently, you can start stock trading for as low as 500 pesos, 1,000 pesos, depending on which bank you're going to use, which channel you're going to use. Okay, so that's why currently there are more than 300 companies. The last time I checked. Okay, so currently I think it grew, this part of the economy, the stock exchange, it already grew up to this point. Okay. In 2009, market capitalization dropped to 45.8% of GDP from 54% in 2002. Okay, this reflects that the market remains illiquid and the free float of listed companies in the PSE is still limited. Okay, basically, depending on the channel you're going to use, I'm using BPI Trade. I think it's T3, yung kanyang liquidity. Okay, if you want to withdraw, you have to wait for 3 days to get the proceeds. So it's liquid, but not very liquid, because you know you'd rather have it real time. If you need the money now, you can just sell your stocks and then get the proceeds. Okay. Mutual funds with market size likewise smallest in Asia are managed by broker-dealers and investment companies. We're largest of them in terms of asset size, are either subsidiaries or affiliates of banks. Yes, majority of investment houses are subsidiaries of banks, because basically banks, they can cover all financial services, but since they want to focus on something, they just come up with subsidiaries to focus on the different types of financial services. Okay, and this is an article, this is more recent, this is 2018. from bworldonline.com. Okay, so I think this is the last article that we'll be covering for this video. The Philippine financial system sustained its growth in the second half of 2018 on the back of the banking industry's expansion, ending the year with an uptrend in assets, loans, deposits, and capital, according to BSP. With the banking system at its core, the Philippine financial system has exhibited resilience amid evolving domestic and global environment. It continued to expand its assets, particularly its lending and investment portfolios, to support private and public financing needs and in turn promote economic growth. Its activities brought higher profitability while maintaining adequate capitalization and liquidity buffers to absorb potential shocks to operations, the BSP said in its report of the Philippine financial system for the second semester released over the weekend. Okay. The BSP, if you go to their website, they do provide, I think, quarterly reports, and then you can check what they've been doing, what they've accomplished in the recent quarter, okay, in the recent year. So this is 2018. There's no pandemic yet, so you can go and check the latest report that they have, so that you'd know how they reacted during the pandemic. It's you can say that the pandemic caused a crisis. It's a crisis of some sort, because it affected the economy as a whole as well. So you might want to check out how the BSP reacted to that, but I'm not gonna discuss that here. Maybe later can do a separate video on it. Okay, the report said the financial system's resources expanded by 9.3% year-on-year in 2018. The growth was driven by the growth of the banking system's asset by 11.5%. Okay, more and more people are saving their money. Total amount 16.9 trillion. That's a lot. Meanwhile, non-bank financial institutions' assets increased by 7.6%. Not bad. Mainly driven by the expansion in the loan portfolio of financing companies and non-stock savings and loans associations. The financial system is composed of the banking industry as well as the non-bank financial institutions. Banks accounted for 83% nasya in 2018. The growth of the banking system's assets was primarily driven by the expansion of the resources of universal and commercial banks. Okay. And then yung thrift banks, and they have slower asset growth rate. The Philippines banking system sustained its growth story, capping the year 2018 with notable uptrends in assets, loans, and capital. Okay, maintained its solid footing as evidenced by satisfactory asset quality, ample liquidity and solvency, profitable operations, and streamlined fiscal network. Loan growth supported banks' asset expansion. The banking system's total loan portfolio expanded by 13.7%. Many people have been borrowing, okay, or it's not necessarily the number of people, but the amount of money being borrowed by the borrowers, okay. However, the expansion of the banking system's loans was lower than the 16.4% and 16.6% growth rates in December 2017 and 2016 respectively. Oh, okay. The recent deceleration in loan growth may be attributed mostly to supply-side factors. On the supply side, banks have opted to be more discerning in the grant of credit to borrowers. That's good. They're protecting themselves, instead of simply lending the money to whoever, they are becoming more strict with their requirements, to ensure that the money would be used properly and that it's going to earn a profit. It's going to be earning and hopefully not come out as a failure. Okay, growth of commercial banks, rural banks, cooperative banks. The central bank said real estate activities still had the largest share of the banking system's total loan portfolio, followed by wholesale and retail trade. Okay, so this is what I've been mentioning earlier. They have specific industries that they think or they determine to be growing or thriving during a specific year. or during a specific economic period, okay, which in a way they contribute to that growth and development by prioritizing them in their lending operations. For the thrift bank and rural and cooperative bank industries, the retail segment had the largest share of lending. Okay, rural and cooperative banks reported high micro, small and medium enterprise and agri-agra compliance ratios as compared to universal and commercial banks. Of course, majority of universal and commercial banks, they cater to large corporations or medium and large corporations. And then you have your rural and cooperative banks catering to micro, small and medium enterprises as well as agri-agra companies. Okay. Total deposits of the banking system reached 12.76 trillion, okay, higher than last year. Savings deposits, 6.02 trillion. Banking system's capital, 2 trillion mark. Alright. Under the Basel Committee on Banking Supervision's risk-based capital adequacy framework, banks remained well above the minimum thresholds set by the BSP, 10%, and the Bank for International Settlements, 8%. The banking system's capital adequacy ratios, both on solo and consolidated basis, improved to 15%. 15.1. Okay. The Philippine banking industry also ended 2018 with a positive bottom line as net profits stood 178.8 billion. Wow. The banking system likewise continued to expand its geographic footprint, with universal and commercial lenders having the largest share of branches and other offices. There were 12,364 bank offices in the country as of December 2018. The outlook on the banking system remains positive given relatively robust macroeconomic performance, adequate liquidity, as well as rising capital buffers and opportunities presented by the growing economy and technological innovations. Okay, and then moreover, the enactment of Republic Act number 11-211, which amends the Charter of the Bangko Sentral ng Pilipinas, RA number 11127, which fosters the efficiency of domestic financial transactions, further bolsters the BSP's capability to promote the stability of the financial system as required by the fast-evolving market landscape. Okay, so that's the current structure of the Philippine financial system. We still have, 83% are banks, and then the rest are non-bank financial institutions. Okay, and then yung breakdowns niya, given yung commercial and universal banks, thrift banks, and then you have the rural and cooperative banks. Okay. What am I supposed to say? I think, yeah. Okay, so this recent report, this is back in 2018. It's already 2021, and we have the pandemic starting last year. So a lot of banks, they definitely reported a higher provision for losses because a lot of people, suffered loss of employment, having to use their savings to sustain their living expenses through the pandemic, the community quarantine, the lockdown. So a lot of banks, definitely their deposits have gone down considerably in the last year. And also, provisions for loans losses because a lot of people and businesses have been unable to pay back the loans, okay, as well as the interest, okay. So there is that, some of the things that they have encountered in the last year. Okay, so that's it for this video. Basically, we've discussed, let's go back. What we've discussed are the following: overview of the Philippine financial system. We've had the nature, elements, functions, development, and the structure of the Philippine financial system. Alright, so that's it for this video. Thanks and bye.